Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing world of corporate filings, and today it looks like our company might have been in a bit of a pickle. This is a big day for transparency, folks, because we're diving into an important update filed by Iveda Solutions Incorporated. And let me tell you, they've had some close calls recently that are making headlines, and it is all about keeping their stock listed on one of the major stock exchanges. So right off the bat, we see the name Iveda Solutions Incorporated, a company involved in some kind of technological solutions probably. And the most important date here is the 25th of November 2025, the date they're reporting an event. This is a current report, which means something significant happened that the public needed to know about right away. They're incorporated in Delaware, which is standard for many companies, and their filing number is 001-41345, and the IRS identification number is 20 to 2,222,203. Honestly, these are just organizational details for the filing itself. We're more interested in the meat of the story. Now let's talk about what kind of securities Iveda Solutions has out there for us to look at. They have common stock and common stock purchase warrants. Think of common stock as ownership in the company and warrants as an option to buy that stock later at a set price. Both are registered on the Nasdaq Stock Market LLC, which is a big deal for a company aiming for growth and investor attention. This little tag here just confirms the specific details about their common stock, the par value, which is a tiny amount per S-share, essentially a nominal value for accounting purposes. And this one talks about the purchase warrants. Both these items are key to how the company is financed and how investors can participate. Okay, here is where the story gets juicy. This section is all about notices of delisting or problems meeting the rules to stay listed on a stock exchange. Basically, the company was at risk of being kicked off Nasdaq or at least facing some serious consequences. So back in May this year, the Nasdaq folks sent a letter saying Iveda Solutions was not meeting their minimum requirements to be listed. These requirements are super important for investor confidence. They need a certain amount of stockholders' equity, which is essentially what the owners have invested in the company minus liabilities. Or they could meet it with a high market value of their stock, meaning investors think the company is worth a lot. Another way is by showing a good amount of profit from their normal business operations. Iveda was apparently falling short on all these fronts. This could have meant their stock would be moved to a smaller exchange or even delisted entirely. That is a huge red flag for investors, as it severely limits who can trade the stock and often leads to a sharp drop in its value. But then, just recently on the 25th of November 2025, there was a turnaround. Nasdaq sent another letter. This one was good news, based on Iveda's most recent quarterly report for the period ending the 30th of September. They reported stockholders equity of $3,768,242. Now this number is important because it is above the $2,500,000 minimum requirement that Nasdaq had set. So because they met that specific rule of having enough equity, Nasdaq is now saying, okay, the problem is resolved and this matter is closed. This is like getting a final warning and then proving you've turned things around. For investors, this is a huge relief because it means the company likely stays on the Nasdaq capital market, which is much better than being moved to a lesser exchange or delisted. And who signed off on this important report confirming all these details? It is David Lai, the Chief Executive Officer and Chairman of Iveda Solutions Incorporated. His signature basically says everything in this report is accurate and true from the company's perspective. So looking at the whole picture here, Iveda Solutions was in a tough spot where they risked losing their listing on Nasdaq. This is usually a sign of financial distress or uncertainty. However, they managed to turn it around in a relatively short period by demonstrating they had regained sufficient stockholders' equity. This implies they either cut down on liabilities, raised more capital, or saw an improvement in their overall financial health that boosted their equity. The fact that this was resolved so swiftly is a positive sign, but it also highlights how precarious their financial situation was in the preceding months. It shows that companies are constantly being monitored and need to maintain certain financial health markers to stay on major exchanges. This is a good reminder for investors to always pay attention to these listing requirements, as they can be a leading indicator of underlying business issues. For Iveda Solutions, this is a significant win. They dodged a major bullet that could have severely impacted their investor base and their ability to raise future capital. The quick turnaround is commendable, but the underlying reasons for dropping below the required equity levels will be something to watch in future reports. Did they just manage an accounting fix, or is this a sign of sustainable improvement? Time will tell, but for now, they have breathing room and can focus on their business operations without the immediate threat of delisting. Alright, that is our breakdown of Iveda Solutions Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think they have truly turned a corner, or is this just a temporary fix? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.